Fed is, people say, how can you trust, the Fed to do the bookkeeping? Like I said, my response is, well, you don't expect the Fed to kind of steal your money. I mean, if the Fed can print all the money at once, it's not going to like mess around with your bookkeeping. So, we have this big spreadsheet, the blockchain if you want, but it's just managed by the Fed, and it's very cheap, much cheaper than Bitcoin, if you're willing to delegate the responsibility to a third party. But then the downsides to all of that, of course, is you'd actually, suppose you didn't want the Fed to be responsible for processing the payments. Suppose, the Fed will likely impose some KYC restrictions on some purchases. They might not process some purchases that you might want to undertake. And so it was at that point that I said, well, we could, if we wanted to, extend the concept one step further. I'm not saying that this is ever going to happen, but just conceptually, you could imagine not FedWire for all, but kind of like a Fed coin, where what the Fed would do is actually just issue these, Bitcoin-like objects, but and they would enforce a par exchange rate with the U.S. dollar. That would eliminate the exchange rate volatility. But they could delegate the clearing of these payments to some third party, some sort of Ripple-like protocol.
Others was like the rise of other CBDCs. So I do work in the US. We work with the Fed, and we work with the academic, a number of universities that also work with the Fed. And the geopolitical impact of CBDCs is one of the topics that we've been working on. And when China announced the digital yuan, that suddenly made the Fed, the US Fed, wake up and go, oh, hang on a minute. This is scary because the dollar is still the primary currency for global trade, reserve currency, and if the digital yuan becomes widely used outside of China, that could be a threat to the dollar.
So that's where Ripple comes in. Ripple's been working on this payment use case. We have over 210 team members. Now it's over 250. Our main offices are in San Francisco. And we've taken on as our vision the Internet of Value. And
it's a really good question. One of the things that Ripple, the company, and really the whole industry has struggled with is, in part, born of our own confusion at Ripple years ago, in providing better clarity of what is Ripple, a technology company based in San Francisco selling technology to banks and financial institutions around the world. And then there's an open source ecosystem called XRP, the XRP ledger, that we can't control. We use it as part of our tech stack because XRP is so fast and so efficient. In contrast with other proof of work based blockchains, the average XRP transaction takes about 4 seconds. It costs a de minimis amount of money. And so it's about 1,000 times faster than a Bitcoin transaction and about 1,000 times cheaper than a Bitcoin transaction. So we have definitely, over the course of the last year, tried to do more to make it clear. We have a set of Ripple shareholders. They're investors in our company, and some of them include very large financial institutions. And then separately, there's people who own XRP. And those are two separate things. I've made the point that if Ripple, the company, went away, XRP would keep trading. Right. There's 100 exchanges around the world trading XRP these days. I think today there's somewhere around $800 or $900 million of global liquidity. And those are two separate things I think in the past have been conflated.
That is, Ripple has invested and is working with about 10 different governments around the world to do central bank digital currencies. A central bank digital currency is a stable coin. It's just issued by the government.
Ripple's work enables global financial institutions, businesses, governments, and developers to move, manage, and tokenize value. So we're excited to have Lauren here today to speak with us, tell us more about Ripple's policy engagement efforts in Washington, D.C., and how everything's going with crypto heading into kind of the end of the year, the second half of the year. So Lauren, thanks so much for being here with us today.
Thanks for having me.
Obviously, I feel like so many things at Ripple, like the hits don't stop. I mean, a couple weeks ago, you all announced you'll be launching a stable coin here in the near future. How do you think about that, specific new product, Lauren, in the context of the stablecoin, economy and the benefits there, and how does it fit into, kind of the broader picture as you touched on, with enabling commerce and transactions?
No, this is absolutely thrilling. In terms of taking a step back, Ripple has enabled the crypto solutions for businesses around the world. We are in 67 countries. We've launched payment systems and pilots from Brazil, South Korea, Palau, and you have to really think about what that means for like the general globalization of the world. The next step is stablecoin, and we are really excited about this launch. We keep hearing from our customers, this is a customer demand, that they want a common dollarized method of transaction, and that is widely available and always on. And so we hope that this will be the right fit for our existing business channels. And there's so much opportunity here. Today, the stablecoin market is about $150 billion, and we have not entered that market yet. And we expect this market to exceed nearly $3 trillion by 2028. That was independent research that was done. And I think that clear demand is showcasing that the trust, stability, and utility from a company that is compliance first, which Ripple is, would be an ideal player. And we're looking to have this pegged to both the XRP Ledger and the Ethereum networks.
And tell us more about where that syncs up with the government, and where there are kind of partnership opportunities for you all with government on moving stable coins forward.
Yeah. Well, currently we are working very closely with the New York DFS, and that's a focus for us. And we are complying with all current law, mostly through the state level. But what's very exciting is, as we speak, the Congress is negotiating a stablecoin bill between Chairman McHenry and Ranking Member Waters. I know the Senate is involved, the Treasury is involved, the New York Fed is involved, as is the state. And so that's something that could really set a great pathway, hopefully for both state pathways to have jurisdiction over this, as well as having a federal oversight. And then we would be able to have the regulatory clarity, not only to operate in the country, but also to identify really good U.S. banking partners and have that business relationship and the security around that business relationship that we want to pursue.
And is the same thing happening globally for you all as well?
Yes, it's definitely a global market, and we're seeing actions, across the board, both in the EU, UK, Singapore, and so this is something that we can see start in the US with our launch and expand.
That stable coins already exist on the market. Maybe having a stabilization mechanism that would consist of a basket of currencies and attempts to create a new private unit of account would be fairly unique and also audacious. What is sure is that it presents significant challenges, as many of the reactions from regulatory and political authorities have illustrated. That's
guidance on how to proceed. So it was the PRA telling the banks and insurance firms what to do, what not to do, how to manage their third parties. But now it's rolling it up a level, right? It's not about individual institutions themselves anymore. It's about the entire sector. So the HM Treasury can now designate third parties or critical third parties, essentially. I'm sure we all love acronyms, so let's refer to them as CTPs. So CTPs will be designated for the financial services industry, and the Treasury can now instruct these designated critical third parties what to do or what not to do, effectively meaning that if you're a supplier in the financial services sector, you can be under this regulation because of your financial services client base. That is, if you are providing critical services, essentially. And now the UK Treasury will have some direct power over you. Now, where this starts to get interesting is this cross-border technology firms as well, right? There may be a niche financial services technology firms, there may be big tech companies, and we know about the scale and power and influence of some of these large technology firms.
Yeah, I was going to say something similar. Like we haven't solved these yet. Payments, remittances, right? We've been talking about it in this space for a long time, and we're making progress. Particularly, given the XRP, ecosystem and the kind of native chain rails that you guys have built. But it's not solved yet. So stablecoins, I think, are the very best opportunity to once and for all make it not prohibitively expensive and difficult and slow to move money, across borders or from company to employee or from company to company or what have you.
One you like is Ripple. You said it is the coin to be looking at right now.
Absolutely.
Why?
Okay, so Ripple actually was the second largest coin prior to the SEC's investigation of them. They did this really weird lawsuit against them. And basically, the Ripple's going to be the track that everything's going to be running on in the future. So they created their own stable coin right now.
Okay.
And Bank of America, like I said, they were doing 100% of their internal transactions. They've got 83 different patents on it. And there's some incredible stuff that's going to be coming out. So
these cynics, though, tell me, only put as much in this space as you're willing to lose. Effectively, as of now, some people say it feels like a casino. Do you agree with that?
It's the best example I have is this. Don't not get involved with something. Do whatever you would do for a nice weekend away with your spouse.
Okay.
And instead of doing that weekend, maybe put that in crypto. Here's what I'll tell you, 3 to 5 years from now, you either made some real money or you just lost one weekend together. Not a big deal.
I know, but I could have had that vacation.
You could have had the vacation or you made your retirement.
Well said. Okay.